Ended up closing out $52,000 in profits today, and about $10,600 of that profit came from Pepsi. And my goal in this video is to share with you why we ended up entering this position in the first place, why I took my profits, and where I think this is headed in the next couple of weeks. So starting first, we are going to zoom out to the weekly chart. Now, the main reason that I took this in the first place is because price action was pulling right back down into a very important level for us. In this case, two very important levels. Now, when you have two parts of your strategy or two very strong indicators that are seated at the same level, this is going to be called a high confluent area, or basically an A+ setup, because you have multiple indicators, multiple strategies, multiple parts of your trading strategy that is telling you that this is going to bounce. And this is why we got into the position in the first place. I want you to realize that that is seated right here at $130. This is where we had not only our smart money zone, but also our point of control on the volume profile. Now, the smart money zone is going to show us significant areas of discount. In most cases, when price pulls into that smart money zone, this is a huge indication that price is going to bounce because institutions are getting such a ridiculous discount on the stock within bullish market structure. So a good example of this recently that we traded was Rocket. Price bounced off of smart money zone, ran 96%. Reddit bounced off smart money zone, ran 188%. AMD bounced off smart money zone, ran 120%. Robinhood bounced and ran 200%, and Roblox actually bounced and ran about 112%. So this is a very, very strong indication of a potential bottom. Now, in most cases, what we're looking for is price to eventually move its way back up to this equal high. And you can see that since bouncing off of this support, the stock is up about 17%. So there's still more upside that could happen here. But what you have to understand is that it's very rare for a stock to just go straight up. I mean, it happens. I showed you in some of those examples. But in most cases, what will happen is we'll get slow breakouts, followed by a pullback, followed by a breakout, and so on. Now, in this case, the other reason that this was such a strong support was because of this volume profile's point of control. So the volume profile is this indicator on the right. It is going to show us where over the past 150 weeks was the most amount of buy and sell volume. Now, these areas where there's like thick, wide bars, they will act as strong support and resistance. So you can see as price is pulling back, strong support here. But once again, as we are breaking out, this is going to be a strong resistance. And this is a big reason why I took my profit here today. Because if price does reject within this range, there's a very good chance that it's going to pull back down to $140. That is where I will look to personally load back up into this position. There's also a chance for a potential inverted head and shoulders pattern to play out here, where price makes a lower low, breaks out to an equal high, breaks down, to another lower low, breaks out to an equal high, pulls back to test this left shoulder, and then breaks out to the upside. So in this case, I am fine with taking my profits here, waiting for price to pull back down to $140. And if that happens, I can load right back up and play the breakout once again. If you want to get access to all of the indicators that you see here, you can get access to all of them and courses to go along with them down in the description. Our entire 12-step trading system is down there. You can learn to master the BX Trender, learn to spot smart money zones and read market structure, download and get access to our volume profile completely for free. The indicator is over there as well as learn how to trade options simply and effectively, and more importantly, responsibly. The link to our entire masterclass series is in the description, completely for free.